Hello everyone, welcome back to the Options Professor podcast. This is Damien and today is Friday, May 14th. I'm going to recap my week, but honestly it's been a slow week. I only had one major trade on, which I did really well on, so I'll talk through that. And then I thought I'd roll into Dogecoin and cryptocurrencies. A lot of my students inside of our Discord have been asking me what my thoughts are about Dogecoin specifically and whether I have any. So I'll finish off this podcast by talking about that. But first, let's get into my one trade. And so I've got it up on the screen here. It's Netflix. And within Netflix, I saw a potential for it to trade within a range this week. And what I did was I selected 502.50 and on the top side and 487.50 on the bottom side. Okay, and all that meant was putting on this iron condor, and an iron condor is simply two credit spreads put on in the same trade. It's a put credit spread on the bottom side and a call credit spread on the top side. That's it. Two credit spreads slapped together makes an iron condor. And I chose the 487.50 and the 502.50. Honestly, I was looking at I think the 20 delta to help me determine that, but also drawing these lines in, you could see where it had hit resistance prior, and then support prior was down here if I look further back. And so that's how I chose these levels. I did a 250 wide strike on each side. So I sold the 487.50 and then bought the 485 for support or for protection. And so that set up this 250 wide spread. And on the top side, I end up buying the 505 call. So you sell the 502.50 call and then you buy the 505 call for your protection. And then you just slap these together. So it's really four legs in this trade. Okay. I ended up collecting on Monday. So I made the trade roughly around here when it was trading around 495. I believe it was 495 when I made this trade. And I collected $1.12 in credit. So $1.12 in credit with a 250 wide spread. That means this is a $1.38 risk. So my max profit is $1.12 and my max risk is $1.38. And now this is totally scalable on one contract. Obviously the profit's only $112 with a $138 risk. You could do 10 contracts. That would be $11.20 in profit and $13.80 at risk. Or you can go 100 contracts. And so this is scalable based on the number of contracts and the risk profile that a trader is dealing with, right? So you may be happy with $112 in profit and $138 risk. In that case, just trade one contract. For the purpose of this, I'm going to be talking in 10 contracts. That is typically the sizing I personally use, and it also helps with my math so I can quickly figure out, what my total risk is and total profits are. All right. So in this case, I collected $1,120 in credit up front, and then my total risk would have been $13.80. All right. And I would keep all of this credit if Netflix stays in between this range. And you can see I draw it into my chart so I know exactly where I'm at, where the red line is on the top side, the green line is on the bottom side. And, it got scary Tuesday because with the market, the tech pullback, we saw it breach the lower level, but then it recovered and stayed above this bottom line. Okay, so it doesn't matter that it breached it on Tuesday. What it matters is where does it end up on the expiration date, which was today, Friday, or the day before in this case. So I didn't ride this to expiration. I don't typically let them expire worthless. I will close them out. It's just best practice for you to close them out before the actual expiration or the market close. All right, so 1120 is what I collected, but I did close it out. And let's take a look how I closed these out. I didn't close them out in one trade. When the stock came down to this 42.50 level, I managed to close the top side of the iron condor for 13 cents. So I bought back the top side for 13 cents on Thursday, I believe. And then this morning when it made the move up, I wasn't sure if the market was going to stay up. What we've seen is a push up and then a pullback. So I wanted to get out of this and lock in my profits early in the morning. And I bought this back for 15 cents. Okay, so total here, if I add these two together, I paid 28 cents to close out this trade. And remember, I ended up selling the spread for $1.12. Okay, so all I need to do is subtract 28 cents from $1.12, and that would give me what my total profit was here. Okay, and I'll show you real quick how I do that calculation. So if I bring up my calculator, $1.12, subtract 28 cents. Here's my total profit, 84 cents. And that right now is, what on 10 contracts would be $840 in profit. And remember, my total risk on this was $1.38. So I just divide that by $1.38, and this gives me my percentage. So 61% profit. Okay. So that is really, really easy to calculate if you want to do these trades. 61% profit in a week is very good. Very happy with that, obviously. And like I said, I just identified this range and hoped that it stayed in the middle, and it did. And so I managed 61% profit on this one trade alone. And obviously I didn't trade heavily this week with the choppiness, but Netflix was something that was, to me, a little bit predictable. All right. Now, talking about predictability, Dogecoin, a lot of people have been asking me, how have you been trading cryptocurrencies? And the straight answer is I haven't. I don't trade cryptocurrencies. Not that I don't like them. I just don't like the volatility of them. And so the volatility has helped people make a lot of money this over the past few weeks. And I know some people inside of our Discord have been purchasing Doge since it was under 5 cents, maybe even like a penny. And for them to see it hit 74 cents last week, that was quite amazing. The one thing I would say is, we want to make sure that we're locking in profits. And so for me personally, if I see gains, from 5 cents all the way to 74 cents, you better bet I'm going to be taking my profit. Whether I believe in the future of Dogecoin or not, it's simply about momentum. And, I, as you guys know, I like to trade momentum, especially when I'm day trading or scalping trades. But when I'm doing credit spreads, I want things that are a little bit more predictable, like how Netflix was this week. And I can make 61%. Week over week, I'm making 20 to 30% on those credit spreads. And, those are easy. That's like just printing money for me over and over, week over week. But, if we're looking at Dogecoin, it hits 74 cents. I think I probably would have been out way before 74 cents if it was my money. I can't imagine holding an entire portfolio in at 74 cents with all of the variables happening, with Elon Musk going on Saturday Night Live, Elon Musk sending more tweets out. I mean, we see this hit 74 cents and coming all the way down to 38 cents. Right, so the 24-hour low here is 38.9 cents, and the 24-hour high was 59.1 cents. That's huge, huge volatility and movement. Whether you believe in Dogecoin or not, it really doesn't matter. You could have gotten out at 74 cents and then bought back in at 38 cents and then ride it back up to 57 cents. So anyways, this volatility is great if you trade it in the right way. I personally am not going to trade cryptocurrencies at this point. I do own some Bitcoin, in full disclosure, but I'm not actively trading it. It's just in my portfolio, and that's about it. Dogecoin, remember, started off as a joke. I don't know if it has the longevity to last. Maybe it does, but even here it says there is no cap. There is no cap for the supply of coins. So be very careful. I would be cautious not to put my entire portfolio into something like Dogecoin, where they can just release more coins and dilute everyone. All right, so good luck if you're trading cryptocurrencies. If it's making money for you, keep going. Just be cautious, take your profits, and I will be back Sunday with my Sunday night watch list. Stay tuned for that. Have a great weekend, everyone.